All right, let's get back to Disney and bring in media industry veteran, former NBC Cable president Tom Rogers. He is now the executive chairman at Orbit Gaming and Entertainment. Tom, always great to see you.
Great to see you, Melissa.
What is your take on this new streaming service and whether or not Disney will actually make money from it?
Well, this isn't the first time I disagreed with market reaction to a Disney report. I'm not quite sure what the euphoria is here. They have a struggling streaming business that lost subs, and they still are in a position relative to cutting costs when it comes to its streaming service to at all be at the point that Netflix was with a similar level of revenues to look like it's on a real path to profitability for that business. When it comes to the sports joint venture, I'm not really sure it solves for anything. I think we got to ground ourselves here. There's only 1% of U.S. households that watches more than 12 hours of ESPN a month. And there are only about 10% of U.S. households that watch more than 6 hours of ESPN per month. So the number of super sports fans out there, I think, is overestimated. I think the bigger issue for the sports marketplace right now is where the fan bases are around local sports and the regional sports networks, and a huge issue in terms of access and pricing for them. This doesn't solve for that. The pricing of this, I think, is, well, nobody knows what the price is yet, but what's been out there, I think, doesn't necessarily bode well for mass distribution. And then you have what I think are probably going to be a lot of very cumbersome governance issues. Does everybody get a veto here? Is it by majority vote? Is the NFL going to be in a situation with this independent management that now controls distribution of football in a way that they don't have a direct relationship with an entity that has that kind of distribution clout in the marketplace? A lot of issues here that I think are going to be problematic as they really get down to the details.
Tom, Karen, thanks for being on. So about this joint venture, did you think this is sort of a trial balloon, or do you think they're far along and they think this is really going to happen?
Well, I think that's a great question, Karen, because if I had to guess, if Warner does not get renewal of its NBA rights, I have a hard time seeing this happen. Now, I'm sure Warner entered into this in part to have another revenue stream so it could bid more aggressively for the NBA rights. But if I'm Disney and Fox bringing football to the table, if Turner, which doesn't have football, isn't bringing basketball to the table, even though it does have some other sports, I have a hard time seeing that they're going to give it the clout in this venture that this contemplates. Now, I also would think that Comcast, which supposedly has some interest in the NBA package and does have a broadcast network, unlike Warner, could easily disrupt this thing in terms of bidding the Warner-Turner package away from it and Comcast NBC getting NBA rights. And I think if that happened in lieu of Warner getting those rights, there's a good chance this might not come together.
So, Tom, when you look at the earnings and you look at how he came out, he was so loaded for bear. It was just one thing after another, a litany of processes that he was going through. Do you think that headline yesterday about this bundle, and do you think the way he came out so repetitive and acted strong, obviously your first comments were it wasn't that great of a report. Are we just looking at him just talking to the activists at this point? Was that what this was all about?
Well, they delivered cost cutting, which delivered a nice earnings pop, but they're light on top line growth. And when you're not only facing a linear traditional TV advertising problem where all the major media companies are facing downdrafts there, but look at Hulu. Hulu, the grandfather of advertising in the streaming space, as everybody is turning their attention to advertising in the streaming space, but it had a huge head start with all this streaming advertising inventory as Netflix, Max, et cetera, are just building up ad-supported households. And ad revenue was down last year. It was down again this quarter in Hulu, and ad rates were down. So there are fundamental issues here in the strength of a streaming business, which is really what market has to look at in terms of reinventing this company. I do think the move to gaming was an important one. Look, kids spend more time with gaming than they do TV. How does a kids and family company not have a greater position in gaming? Smart move. We'll see what comes to it. As he said, there's a lot yet to come. But on the joint venture with sports, I was co-chairman of A&E History for 10 years, which was an NBC-ABC joint venture. And I'll tell you, the reason that one worked is we didn't have any competitive entities. Iger on that call was talking up ESPN streaming standalone relative to this new sports joint venture. When you have competitive issues that misalign you with others in the venture, very tough for it to work.